All right, Bashar, thank you so much for coming on. Much appreciated. It's great to have you.
Thank you, Alec. Thanks for having me
Of,
today.
of course, of course. You want to dive in by telling the audience a little bit about you, who you are, and your background?
Yeah. So, thank you all for having me today. I'm Bashar Baraz. Actually, a little bit background about myself. Was born in Baghdad, Iraq. Moved here with my family in 2008. When we moved here, we went to my aunt's in Philadelphia at some point. Spent about 6 months there. You know, being born in a hot environment, I think we didn't really like the cold environment. So we moved down to Jacksonville, Florida, where my uncle has been since the early 90s. And then ultimately, a few years ago, my family decided to move to San Diego, California. And actually, they're neighbors with my uncle now
Nice.
from my mom's side. So that's a little bit about me. And met my wife in Jacksonville. I spent about 14 years there, and then she was progressing in her career. So we moved down to Orlando, and then we landed in Miami about a year ago now.
That's awesome. Yeah. So just so the audience knows, we got introduced by my girlfriend Anna. Actually, helped you find your apartment that you rent in Miami, and dude, so I sold a unit like 2 or 3 floors under you to my good buddy Tom, who I know you've connected with
Yeah,
now.
know Tom very well.
He's such a good guy. He actually got this plant here on Saturday. We had a party. I think it's a bamboo, but super
Nice.
cool. Yeah, I put that right there. But yeah, so that's kind of how we got connected. But your view is insane. I think you have one of the best views in all of Miami. And I always talk about the port, right? Brickell and Brickell Key, we in downtown, we get to look at the port. How ugly is that thing? It's crazy. Whereas you get to look over the Venetian and over to Miami Beach, so you get to look over these beautiful mansions.
Love the view. My wife jokes all the time, we're not moving from that place. And us and Anna saw probably 14 units that day because we had to make a decision very quickly. And once we saw that condo, man, everything else we saw after that, it's like it didn't even matter.
That's great.
It's like we were locked in. That's it. This is the one we wanted.
Sure. Yeah, it's beautiful. So, all right. So, you've been in Miami for a year now. You said.
Yeah.
Now, when you were coming over, or when you got here in 2008, or and moved around a little bit, or your family moved over to California, like what were some struggles that you went through during that time? Like, how hard was it to adjust?
Yeah, I would say it was pretty hard. Obviously, coming in a brand new country, new language. Although we followed the British system back in Iraq, so you study English starting in fifth grade all the way through college. Actually, and our college is in English. So language-wise, it wasn't necessarily a barrier. However, just getting acclimated to the new environment, how people are here, just a different culture, obviously.
Sure.
So I was a junior in high school and then a senior. So just getting adapted to the high school here was obviously a completely different environment than where we were back there. So, and then ultimately went to University of North Florida, where I
Nice.
got my degree in chemistry. Actually, funny story. I was supposed to go to dental school because a lot of the immigrant families will push you towards medicine, law, or engineering. Typically, is what you'll realize because we value education, and back home, like if you're educated, you're very likely to succeed. Otherwise, you might not do well in life. So that mentality does carry over here. So I was going to go to dental school at some point. Did pre-dental, got a chemistry degree, and I guess I disappointed my family when I decided to change my mind after I got my degree and worked as a chemist for a short period of time, and then I decided to, look for something else, and I got into finance, and wow, here I am, 8 years later. Looking back, it's been a crazy journey for sure.
8 years in finance, you said.
Yeah.
Yeah, and can you dive into a little bit about who you work with, what type of clientele you're in, and just kind of your business in general on the finance side?
Yeah. So really, who I focus on working with is Henrys, high income earners, not rich yet. I like to call them because there's a lot of young professionals who are doing really well, but they might not be getting the service that they're looking for because there's a lot of advisors who run their business differently, with minimums, or if you don't have a certain level of wealth, They're great advisors, but they don't have the time to really start with someone who's just starting their career maybe or something like that. So really focusing on that. And then also retirees, I do tend to focus on income generation and planning for retirement. So there's a lot of people who aren't really sure how to go about that phase, and we do tend to focus on that as well. And then firefighters. I work with a lot of fire departments in the area, especially in Florida, but mainly in Dade County and Broward. So always looking to serve that community. And then some medical professionals here and there, mainly because a lot of the people that I know in my world are in the medical field. So
Sure.
naturally that...
Well, that makes sense. That's why your family wanted you to be in the medical field originally, yeah?
Yeah. We do get pushed towards medicine typically. And, it's a great field, obviously, and it's secure. I think with what our parents went through, they value security. And they know that, okay, if you spend the time to get educated and go through that path, you're guaranteed a great earning potential
Sure.
and a great career. And, people in medicine are always going to be needed. So
Sure. So you kind of got a little bit of a tie-in there for your family. It's like you manage the people's money that are in that field.
Exactly. And I have a lot of friends that are in that field. Some love it. Some wish they might have done something different, believe it or not. But you invest 12 years of your life, it's very difficult to change.
That's
after all of that.
That's such a big commitment. I mean, 12 years of school, delayed gratification at its finest. It's
a lot of debt.
A lot of debt. Yeah, I can't even imagine. It has to take a while, right? Because they come out making a couple $100,000 a year, right?
Yeah, like general medicine, hospitalists or internal medicine probably make $253 a year. Now, depending on where they are, some make more, some make a little bit less. Specialties do tend to make more, obviously, but if you're specializing, and I'm not going to speak on their behalf, you are spending an additional few years between residency and doing a specialty program. But you get compensated for that, obviously. So it's really, think of it as you're investing time to ultimately earn a higher income.
Okay, so you said a Henry is a high earner, not rich yet. Okay, love that acronym, right? Then you have DINK, which is dual income, no kids.
Yep.
Right? So all these acronyms being thrown around.
Yeah.
So for the Henrys, like let's say a Henry comes to you, right? And they're like, hey, help me. What does that process look like? And how do you, you want to dive into that a little bit?
Yeah. Depending on what they're looking for in an advisor and if they've worked with someone or not, typically we like to start with consulting first. I'm a firm believer in planning and setting the roadmap. Think of it as you're about to go to a destination, but you're going to put that destination on the GPS so you avoid taking the wrong turns. It's the same idea when it comes to planning and creating this overall roadmap so that we can guide the individual or the family to avoid those mistakes that are costly over time. So we start with planning, which is, consulting. Clients are paying us for our time. So regardless of their wealth level, regardless of how much they have, if they're willing to pay us and compensate us for our time, we get into a planning agreement. And it's a yearly agreement that we go through a planning process, which is, think of it as a pyramid. You start with cash flow and risk management. You have to protect yourself first. This in real estate, there's a lot of litigation and liability and things like that in this world. So you have to start with protection first, and then also protecting yourself and your family if, God forbid, the unthinkable could happen. Life happens to all of us. And then from there, you build on that. So looking at your net worth and your financial positions, debt management, cash flow, and then you get into wealth management. Okay, I've got this excess cash flow. What should I do with it? Where should I put it? Should I buy real estate? Should I put it towards my business? Should I invest in the market? And then eventually, it all leads to income planning and slowing down in retirement, estate planning, tax planning, and then legacy. Do you care about leaving something to a family member someday, a charity, a cause that's important to you? So it's kind of a hierarchy. We're not going to touch on all of that with someone starting out, but that's how I view planning in general, is to, start of life, midlife, and then end end of life planning ultimately.
Interesting. So there's different phases. You would suggest different things based on where somebody is at, their individual situation, and all of those good.
Exactly, yeah. And to set that roadmap and really figure out what's the movie in their mind.
Sure.
Everyone has, notions, things that they want to achieve, whether it's short-term, mid-term, or long-term. So that really typically drives the conversation. I like to think of money as a tool to get us to where we want to be. Yes, human nature wants to have as much of it as possible, but there's comes a certain point in life where it's like, okay, you might have enough, and now you can spend your time doing things that you're actually going to enjoy, and maybe you've put off for a little bit because you're focused on a career or a business or whatever endeavor that you're doing.
Sure. Okay, that's interesting. So that's high earners, not rich yet.
Yeah.
Henry, you said that you also work with
firefighters, medical professionals.
Okay.
And then I would say that, yeah, that's
firefighters and medical.
Now, I am working with small business owners, other verticals, but I would say that's the main. My bread and butter.
So does a Henry plan look different from a firefighter plan and a medical plan? Like, could you dive into those differences maybe?
Yeah. Because, a firefighter is going to have a completely different situation, benefits, plan, and also how long they might work, because firefighters tend to retire earlier than the normal person who might be waiting till their mid-60s. Granted, depending on everyone's situation and when they have enough and they know that they can slow down, I like to say making your job optional. I think there's a lot of times people think of retirement, I'm going to sit home and flip through the TV. For me, it means having the independence to spend your time where you choose to, because money-wise and cash flow, you're able to survive and live the lifestyle that you envision
100%.
for yourself and family. So, because I
100%.
Personally, I don't think I'm retiring. I might not work in the same capacity when I'm in my 70s and 80s.
But you'll still do it because you love what you do.
Because I love what I do. And there's a
1,000%.
lot of professionals today who love what they do.
100%.
So to me, it's just making your job optional. If you decide to stop tomorrow, you can. If you decide to continue, you're not doing it for the money at that point. You're doing it for fulfillment and enjoyment.
100%. We see a lot of that in the real estate side. Is like, you can do real estate till you're ready to pass away the next day. You know what I mean? It's more of a mind and a connection game. So we see a lot of people saying, oh, hey, I don't think I'm ever going to retire. I'm going to work till I'm 105 or whatever. And I'm in that boat as well. Love what we do. So that freedom and that option that, like, having your financial plan set up gives you, I think that's such a cool goal to have, is like, when I want to do what I want to do. So
exactly. And then and then there's some people who are like, what? No, like, I'm just looking for risk management, or I need you to manage this money for me, and that's the extent of the relationship, and that's totally okay. We're not going to twist anybody's arms into anything, but we do tend to push planning first, because a lot of times if you're just focused on an investment vehicle or an insurance or risk management, then you're missing the boat in all the other areas, because every decision that you make in your financial house affects other areas over time.
Sure.
Basically. And then the last thing you mentioned was medical professionals. Obviously, they're dealing with a lot of debt up front. They're just starting out. They've spent 12, 15 years of their life going through schooling and barely making anything. So a lot of times, a lot of them are like, I'm freaking tired of not being able to spend money. I want to spend more now. So
interesting.
Sometimes it becomes
kind of like
difficult
that
to delay that gratification, because it's been delayed so long for them that when they come out of school and start making, $300,000-$400,000 a year, they want to buy a bunch of stuff, and that's okay.
Like a property and a vehicle.
Yeah, property. They're getting married. They have their student loans, and then they've always had a dream car, and that's okay. But you just have to be careful.
Sure.
Because then you might get stuck in this continuous debt cycle.
Sure.
Where you're making a great income,
but you're spending
all of
it all
is going towards your lifestyle. Because I've seen people make $800,000, $1 million a year, and if their income stopped, they'd be screwed.
So what is that called? I think there's a term for it where basically your lifestyle depends on your income level, and you basically, us as humans, I think there's a psychology behind it, like, spend it all because I can. You know what I mean? But then you forget to put away, and then you're stuck in trouble, or you're not investing in real estate. Whatever the case may be, you're just in and out.
I agree. It's. I always say this to all my clients. It's not how much you earn; it's your ability to save.
1,000%.
If you prioritize saving first, which is why 401ks and all these retirement plans work, because the employee doesn't see the money hit their bank account. It's being taken out from the paycheck before it hits their bank account. So they're constantly saving without really feeling it. You want to create something similar to that, to where if you are self-employed, or even if you're an employee but you're still putting money in a 401k but you want to do other things, then when that paycheck hits, take money away and save it. Then if you end up spending all that money, it doesn't matter. You've already prioritized saving first, because I can tell you psychologically and from a behavioral standpoint, to your point, when you see money, you're more likely to spend it.
100%.
And so if you can put it away and kind of not see it in a way, then it really helps, saving and investing in some way or fashion.
There's a bunch of books that I've read over the course of life now, and it just says pay yourself first, pay yourself first, pay yourself first. Always pay yourself first. Maybe it's 10%, maybe it's 20%, whatever the case is. So, all right, Bashar. So when you see these people come in that you work with, what are some of the common problems that they have? Like, what problems are they coming to you with and being like, I want to do this or that?
Yeah, I mean, pretty general question, of course, but in the grand scheme of things, I think most people just want to know that they're going to be okay, right? That's ultimately what drives someone to do any decision in their life, is they want to make sure that they're taken care of, and then that their family is ultimately taken care of if anything was to happen. So a lot of times it's maybe they're unsure. Are they on the right path? Are they investing in the right vehicles? Are they doing the right things? Should they buy that rental property that they've been thinking about? Should they establish that business and take the leap? Or maybe they're okay where they are. So obviously we all have ideas in life and where we want to be, but a lot of times there's also fear in something new. If you're about to take a leap and you've been employed, but you're about to start your own business, and now the paychecks stop, that's a big leap, because I can tell you I've done it, and we can touch on that. And it was a scary moment to do that. So a lot of times, people just want to know they're okay, they're on the right path. Is there anything else that they should be doing? The other side of it also is, in the world of technology and the internet today, there is a vast amount of information out there. So the consumer can't differentiate what's an opinion anymore and what's a factual source.
This is true. Everyone's saying whatever they want to say, and nobody's checking it.
Exactly. There's a lot of people, there's a lot of videos, podcasts, trainers, you name it, it's there. And the consumer is getting so much information, which is nice, but also they're unsure who's right, who's wrong, what's an opinion, what's a fact, and where should they go. So a lot of times, they're looking for somebody to look at them in the eyes and say, you're going to be okay, or this is the way to do it.
100%.
In any field, I think, not just in our
100%.
field.
100%.
They just want to know that they're going to be okay, or if they're not going to be okay, what else should they be doing?
I think a lot of people get themselves into trouble when they start following too many different people, right? Because everybody has their way, and different ways work. It's proven. There's no one right way. So when you start following one guy that's saying, do this, do this, do this, then you got another guy producing content, do this, do this, do this, and then a third, do this, do this, do this. You have 3 different options in front of you. And of course, you just want to be wealthy. Like you said, you want to be okay. You want to make sure your family's taken care of. But which one do you follow? And then it comes to, okay, let me take some of this, and some of this. And then they try to pool it all together. But that's not how the person that talked about it got wealthy in the first place. They didn't take a mix of this and a mix of this and a mix of this. They did it their way. So I think that brings up an important point. Be careful who you follow. There's many ways, but mixing different strategies is not always the right answer.
Exactly. And the other thing that people need to watch out for is what type of licenses this person or individual has, or do they carry any licenses? Because if you're not licensed, you can say whatever you want and there's no repercussions for that.
Sure.
If you carry certain licenses in the industry, you can't say what you want, and there's compliance, obviously, and regulations, depending on which side you are in the industry. And what I tell a lot of people is there's a lot of marketers out there who pretend, I mean, I'm not saying they're pretending to know. I mean, I'm sure they have general knowledge, or they've read books, or they're just sharing their opinions, and that's okay. That's great. I think everyone is entitled for their opinion, but the consumer has to be careful of, am I following a marketer who's just trying to get followers?
Who's trying to,
that's how they get paid?
or sell a course,
to my newsletter,
yeah.
Or buy my course for
Yeah.
$100, or whatever the case.
Yeah.
Or are they a true professional who's actually practicing this every day?
Sure.
And has gone through real life experiences with clients in all phases of their life? Do they have a retiree? Do they have a 90-year-old who's on their deathbed? And have they worked with a 30-year-old who's just now starting their career, or 25-year-old?
Sure, 100%.
So, I think experience plays a big role into it.
Absolutely.
And quite frankly, you also can't be an expert in everything.
100%.
Like it is in any industry. I think most people, that's why they say there's a general, surgeon, and then there's a heart surgeon. There's a specialist who only does heart surgeries and nothing else. So that person is more likely going to know a lot more about the heart than a general surgeon.
Of course.
For example. So it's the same thing in my industry. I tend to focus a lot on the young professionals, but also creating ways to generate income ultimately and turning assets. Because a lot of times, you'll meet with an individual or a family and they'll say, well, I want to have $2 million every time, or $5 million, or throw X number, whatever you have. And my question is, well, what does that mean to you? Why do you want to have that sum of money? What does it actually mean to you and your family?
What does it allow you to do?
What does it allow you to do? And to me, what it really boils down to is income and cash flow. If you have sufficient income and cash flow that comes every month, like mail check, like mailbox money, like Social Security and a pension, if you can create a source of income that's sustainable throughout your life, quite frankly, having money in the bank is nice, but it's not going to move the needle for you because you have plenty of cash flow to live your lifestyle.
Sure.
When you don't have enough cash flow, now people start stressing, well, what if I live 30 years? Am I going to have to go back to work when I'm 80? Am I going to run out of money? Am I going to be able to take the trips that I've always wanted to do? Or if the market doesn't do well, do I have to sit at home and eat cereal?
Sure. 100%.
So
now this brings up an interesting point. I think you have a couple properties yourself, right?
I do.
Yes.
Firm believer in real estate. I tell this to all my clients: diversify your assets and don't leave everything in one basket. We've all heard it. Don't leave all your eggs in one basket. And that's really true because we've seen it in many environments throughout history that one sector could do really well and another could do really poorly. So if you're concentrating your wealth in just one area, well, if that sector goes down or has issues for a certain time, like we've seen in the financial crisis 2008, we've seen the dot-com bubble in the early 2000s, and most recently we saw what happened with markets when COVID started, when people thought the world was ending and markets were crashing. So just diversifying the wealth is very important, so you're not relying on just one source of income. There's nothing wrong with having your business, having cash flow, having rental properties, building wealth, but then also investing in the market and doing other things so that if you're, you probably know this, if your tenant decides not to pay you for a couple of months or multiple of them can't, you're not like, oh crap, I got to now figure out how I'm going to sustain these properties, especially if you have mortgage obligations.
100%. So again, this brings up another good point. So when you go start a business like you're in, right? It's not getting started is a little bit rocky because you're not getting that like recurring income every month, right? So can you talk a little bit about that process and how you got started and how you were able to make it work?
Yeah. So I actually started my career with, so I worked as a pharmaceutical chemist for 9-10 months. It was a family-owned laboratory in Jacksonville, Florida. great people. But what I realized was it wasn't like I enjoyed chemistry, but it wasn't my true passion. And ultimately, it was analytics. I was good with numbers. I was like, I'll do this. I didn't want to memorize stuff, so biology was not my thing.
Sure.
Like just sitting there and like drilling and memorizing, like totally not my thing. But anyways, so I started my career with Merrill, where it was a volume, getting assets, calling as many people as you can. And then I worked with a small mom and pop shop over there where we managed wealth for people. And that really started to show me, okay, this is when you sit down in front of someone and start planning for their lives and help them out. And then when I saw that, I was like, you know what? I'm young. I've always envisioned being, a business owner or doing something for myself. So a buddy of mine and I actually decided to work with another firm, and we started a partnership together. And we both started our careers in Merrill together. We went at that small mom and pop shop. It was a family-owned wealth management firm. And then me and him, decided, you know what? We're young. We're both looking to build something for ourselves. So we decided to do a partnership. We went through a lot of struggles. We were both in our mid-20s then when we were doing it. Maybe, 26, 27, I would say. And, in your 20s, you're like, screw it, let's do it. And then you realize, oh, shit, this is a lot, harder than I thought it's going to be. But it was a great learning experience to really break the ice. 10 months into it, we were struggling up and down. It just wasn't working out. So we decided, you know what, let's go our separate ways. He went into the banking side. I was looking at other opportunities and ended where I am today with Coastal Wealth. Still self-employed. So I can tell you it was a bumpy journey because, I racked up a lot of debt in that partnership. And when you no longer, I gave up great paychecks before I started that. And my wife now, which was my girlfriend back then, was like, are you crazy? You're giving up this nice salary. Why would you do that? And I said, you know what? And she can attest to this. I said, if I don't do this now, I'm not going to do it when I have kids. I don't have anyone reliant on my income.
100%. 100%.
So if you're going to take risks in life, ideally, you do it where you don't have people relying on your income, or it's not going to affect their lifestyle if you fail, because a lot of businesses fail in the beginning. It's very hard to, and many business owners can attest to this, it's very hard to start your own business, get it going, survive long enough, fake it till you make it, so to speak, and then eventually see the fruits of your labor maybe 5, 6, 7, 8 years out, and so on.
100%.
So I think if anyone is thinking about their business, ideally, I think maybe, looking back, I might have done it a little bit differently. Not that I have regrets, but have a nice cushion of savings to where if you don't get paid for 2 years, you're fine.
Sure.
Ideally. Now, not everyone's going to have that. But if you can do that, it really allows you to focus on the business rather than just trying to survive and doing whatever
being super stressed, just trying.
Being super stressed. But also stress, gets you off your ass and gets you going.
100%.
When you get to a point where you're like, okay, I really got to do this.
Your back's against the wall. You got nothing left to lose.
Get screwed. You'd be surprised what you're able to accomplish when you're under that pressure.
100%. That's interesting. So now your how many rental properties do you have, by the way?
So I have 5 between me and my wife.
Okay, so you have 5. Were your rental properties helping that cash flow, right? You talked about cash flow, monthly cash flow. Did that help you throughout the time of starting your business?
Absolutely. I think having that rental income definitely helped. And it did support in a way to allow me to just focus on it. I still got myself in debt though, because there's expenses, there's tenants that don't pay on time, there's taxes, there's a lot of things that go into real estate besides it's just like, oh, own your property and you have cash flow forever. Well, there's a lot of ups and downs there too sometimes. So it was certainly a struggle, but those definitely helped. I can tell you that.
That's how I have everything I have, is the cash flow that comes from that real estate. So I feel so lucky to have that. And I feel like it's my job and my responsibility to share that with other people, right? Like if they can be in our scenario and get that monthly cash flow, it puts you in such a better position. So that's why I always talk about it, is like when you have that to lean on, like worst case scenario, put Section 8 in there so you know that money's coming, right? Like once you own a property for a couple of years, you can swap it to Section 8 because Section 8 typically runs a couple years behind what market rent is. So once you have a property for 3 years, swap it to Section 8 because you'll be cash flowing, making more than what you're paying on it. And then it just becomes, it takes away all the uncertainty of it. So I don't know, that's a whole nother podcast in and of itself, but I just wanted to get the point across that cash flow from real estate has helped both you and helped me so much in our lives.
Absolutely. And speaking of Section 8, we actually had a Section 8 tenant in one of our properties, and it's guaranteed cash flow.
Crazy.
It might not be market share, but the city is paying for it.
And it's peace of mind. Like if you're not up in, like is yours in Jacksonville, for example? Yeah, you're not up in Jacksonville. I have a property in Wisconsin. I'm not up in Wisconsin. Yeah. Throw Section 8 in there. Let it chill. Like they come and do an inspection every year on the property. The tenant has to keep it nice. If they don't, they're kicked out.
Yeah.
Crazy.
There are Section 8s moving into my family's neighborhood in California.
Okay.
That's a whole other subject.
Let's talk about that because you mentioned first back in 2008 when you got here, what you were seeing a lot of people do, not necessarily your family, but a lot of people were trying to move to California, but Section 8 was full?
Yeah. Don't quote me on this, but at some point, obviously, Section 8 was more available to a lot of families, and then I think as more and more people started moving here in the droves, it created this long list where now you have a waiting list to qualify.
We have one here in Miami. It's like 4 years long.
To get it. So, and I think, the one in California now might be like 8-10 years. I don't know. Something like something ridiculous. So what a lot of these immigrant families or people in general that are just not necessarily just immigrants, even the people here that can no longer afford housing are basically applying for Section 8. They started moving to other states like Texas, Arizona, and whatnot because the list wasn't so long there. Like maybe you'd wait a year, and it's a federal program. So once you're in the Section 8, then they'd be like, hell yeah, let's go move back to California. And they're getting Section 8 for properties that are $6,000-7,000 a month in rent, which is like insane to me.
So you're saying that they would go to
$8,000 a month.
Let's say they go to Texas, right, and they get $2,000 a month for a property. Since it's a federal program, they can move back to California, and that $2,000 goes up to like $6,000, $7,000, whatever
they're putting there.
That's crazy.
Yeah.
So that's the loophole.
I think that's a loophole where some people are, exploiting that. Basically.
Sure. That's interesting.
Because why wait 10 years when I can go suck it up in another state maybe?
Why don't you go to like Wyoming or something? I'm going to Wyoming to get Section 8.
And then, go to a nice neighborhood, be like, I want to live here. Now, what's fascinating to me is how the government is allowing these people to be in, higher rent environments. That's like someone, that's like a Section 8 going to Brickell here and living in a penthouse, and the government is paying $12,000 a month for their rent. Why?
It's crazy.
I don't know. That makes no sense to me. No discrimination here whatsoever, but it's like, if someone can't afford these very nice things, they're just getting it paid for.
Yeah, it's insane. I think this kind of tails into the thing of like own nothing and rent everything and be happy. Like they're literally, so with real estate, all the big funds and mega companies are buying everything up, right? And soon people are not going to be able to own property. Strictly, like if you're in Miami, your parents are helping you buy property or you're not affording property.
Yeah, a starter home is $1 million now.
100%.
A starter home.
So the gentleman on the podcast yesterday, he's been here since, I don't know, like 2000s or something, right? And he said something very interesting. If you live and rent in like Brickell, Edgewater, downtown, a nice place, $3,000 to $4,000 a month, your expectations coming out, the natural progression is go from a condo to a house, right? Natural progression, you want to have a family, you want to have a yard, dog, all these things. And he goes, the expectation for the quality of property, moving from those buildings to a home starts at about 1.5 million. You want the white walls, the white floor, the porcelain, the granite or the countertops. You want all these things. But if you go to like Shenandoah, for example, which is a very awesome starting neighborhood, you're getting a shack, a 2-bedroom, 1-bath for $800,000. And people are not willing to lower their expectations and take that property. But you have to. You literally have to. And you probably still need your mom or dad's help.
And you still need $200,000 to renovate the property.
Exactly. So I think this whole crazy lifestyle of everything's super nice in Brickell, downtown Edgewater, is hurting people because they won't let their ego down to accept a better long-term plan and just take on maybe a property that's not looking as good. Like if you can just get over that hump, like your property does not have to look good. Let it be. Like who cares?
Psychology. It's hard.
100%.
Like when you're used to doing something for so long, it's very hard for change. It's just change. And ultimately, I think you're seeing it probably in your industry where people are moving outwards. You know, they're going to Weston, they're going to other areas, they're going to a plantation, whatever, because it's becoming, very expensive here, and it's unaffordable for a lot of families. I mean, I remember growing up, we used to dream of a 6 figures. Oh my God,
$1 million.
I want to make 6 figures. No, not even.
Oh, 6 figures. Okay,
6 figures. It used to be like 6 figures. Oh my God.
Yeah.
That's the dream. Now 6 figures, you're barely making it.
You cannot live off of $100,000 in Miami.
$100,000 is nothing.
Impossible.
And it is showing that, obviously with inflation, everything that's happened the last couple of years, that hasn't helped either.
100%.
With costs rising everywhere. But my only question, a lot of people always is like, how sustainable is this going to continue to be?
So you said that there's a ton of credit card debt right now, and everybody has credit card debt. Like we touched on it a little bit behind the scenes. Can you talk some about that?
Yeah. Credit card debt is at all-time highs. You have interest rates that have been higher, that's higher now than the last, call it 15, 16 years. And with a higher interest rate environment, now you're seeing credit card rates of 25. I saw the one the other day with a client of mine, 30% APR.
Okay, let's
30%.
Let's break this down really quickly. So if you're paying 30% interest annually on your money, do you know how hard it is to get out of debt? Because that means if you were to invest your money and make 30% return, which by the way is an insane return, that's an astronomical return that anybody would take any day.
Of course.
If it's hard to make a 30% return, imagine paying out a 30% return.
Exactly.
It is crushing you. It is crushing you.
It's crushing a lot of people. And auto loans are high up there. The other issue is that, debt as a country is spiraling out of control. The government debt, I don't know, north of 35 trillion now, something like that. And, we've been running on a deficit for so long that, at some point in the future, we're going to have to pay for this in some way or fashion. And I always, tell a lot of people, we're in a lower tax environment today from an income standpoint. We might very well be in a higher tax environment in the future because what is going to be the way for the government to pay off the deficit? We haven't seen them cut budgets and spending. Hasn't happened.
You know what this reminds me of? The Miami condo crisis.
There you go.
You know what it is? It's just deferring the payment down the road, kicking the can down the road, and letting somebody else deal with it. I think that might be their mentality towards this. Is like, let's just rack up the debt.
Associations tripled for all the
exactly
condo owners.
Exactly.
They're like, oh crap, we got to change this roof. That's 25 years old. especially after the tragedy
Well,
that happened in Surfside that changed the entire environment now for them.
I think the government's being run like the Miami condos. Kicking the can down the road, mismanagement, fraudulent stuff going on all the time. It's I don't know. It's so interesting, man.
Not to get, I typically leave political stuff out of the way, but like, regardless of who's running the country, like, we have to address the debt situation.
Sure.
It is spiraling out of control, and someone eventually has to pay for this.
Mm-hmm.
And it's only going to get large. Imagine like having a credit card with 30% interest, and you just keep making minimum payments, and then you let it ride for 50 years. Well, you're never going to pay that off.
Yeah.
Never.
Yeah.
It's kind of the same idea.
It's crazy.
And that's concerning because, what's the easiest way for the government to get money is to tax us more. Increase flows. Well, they can decide to increase tax rates because if you look at historical tax rates, we are in one of the lower tax environments that we've been historically. So, yes, no one wants to pay taxes. I get that. But we might very well find ourselves in an environment later to where
we don't have
top
a choice.
Marginal tax rate is now 50%, not 37%.
Sure.
So
I think this brings up a good point as well, particularly being in Miami with all the international people coming in and out and Airbnbs and traveling and all this stuff is a lot of people I'm noticing are saying make money in the United States, but don't live in the United States because the earning potential here is so great and the dollar goes so far in all these other countries. A lot of people are just jumping ship, going to South America or Europe, Italy, wherever the case may be, Dubai, UAE, and they're just taking advantage of the quality of life in these other areas, which I think is interesting. Obviously, COVID with the work from home and all the tech that advanced from that situation, it's interesting to see all these people flee and jump out into these different locations.
yeah, it's becoming too expensive to maintain a good lifestyle. People say, well, back in the 70s and 80s, you had a family that was being supported by one spouse working. Fast forward to the late 90s, early 2000s, now both spouses had to work to support the family. Today, both spouses working and their kids to support the household. Mm-hmm. If you really think about it. I'm talking for the average families out there, which is a large number of them. And it's becoming unsustainable. Add inflation and costs rising astronomically, it's just not sustainable, and it's really worrisome.
It's crazy. I my insurance is renewing on this property, and Citizens is reverting back to last insurer of resort. So I got these two other quotes from Manatee and some other insurance company, and it went up like an insane amount, like 15%. I'm like, yep. Sorry, condo owners, your policy is going up $200,000 on $1 million policy. It's like insurance is just insane in Florida too, which is a big talking point because I know a lot of people are getting hit with that right now. So, yeah, man, it's just crazy, all the things, all the scenarios going on. How do you suggest somebody get out of debt? Like, what do you suggest in that world?
Especially seeing it in Miami, I think people get sucked into the lifestyle. And there's nothing wrong, don't misunderstand me, there's nothing wrong with living lavishly. But you have to understand that if you're taking your hard-earned dollars and you're spending it on entertainment, it's not getting you far in life. Yes, you are getting that instant gratification now, but you're not building anything. You have to delay gratification as long as possible. And that's hard to do, even as an advisor, trust me. But really living within your means. Like, yes, if you make enough money to try and upgrade your house, you got to ask yourself, do you really need to do that right now? Or could it wait a couple more years, delay that gratification, and invest the money instead? Get yourself out of debt. You mentioned debt. Well, debt accumulates when you're spending more than what you're earning. So I think debt management within itself starts with budgeting and cash flow. it is so easy today to swipe your credit card. You don't feel it. Back in the days where it was a cash society, if I gave you a cash in an envelope, as the cash dwindled, you're going to feel the pain. Every time you go to a store, if you had $500 in your wallet and you took cash out and you paid for something, you're going to feel the pain because you're like,
It's a physical
crap,
thing, yeah.
I'm just dwindling. I'm losing this. With a credit card, you don't feel any pain because yes, you know you're spending money, but you're not physically seeing it until you get a surprise in the mail with that billing statement.
So when I first got to Miami, I was spending crazy amounts of money on my credit cards. So when I was up in Wisconsin, I was running like advertising on there for real estate business, all these things, right? I was spending a lot of money, but I was making quite a bit more back. So I get down to Miami, right? And all my business goes away. And I have to meet all these new connections and restart, similar to what the scenario you're in, right? It's like, okay, we got to rebuild from ground zero. But I'm going out to the clubs and like trying to meet all these people and like just swiping. I racked up pretty hefty bills. But I very quickly realized I shut down my credit cards, every single credit. I do not have one credit card open to this day, and I will never open another credit card in my life because I am scarred by how much I was spending, and I'm so frustrated with myself on how I let that go. Now, I don't have any credit card debt, and it's all been taken care of and paid off, but just realizing coming from a smaller city to a big city like this, the way that they get you to spend money, it's crazy. So if I know that I'm a pretty disciplined person in the financial space, and I was able to like clear that up and cancel all my credit cards. I just know that there's a lot of people out there that are not very disciplined, and I know for a fact that their cards are just like loaded. I'm talking $50,000, $100,000, like so crazy. It's so crazy.
It's crazy, and the thing is, you get sucked into the lifestyle here
100%.
because it's constantly in your face,
pushed around,
especially in the city. Like, look, living in Jacksonville, you don't see the lifestyle,
the Lamborghinis,
like
the Rolls Royces,
people have wealth,
the
Ponte
bags.
Vedra Beach and some of the Atlantic Beach and some of the other areas there, and even in Jacksonville, but they're not the flashy type. Now, trust me, I love cars. I envision having a car collection at some point for my own enjoyment, not to be like, oh my God, look at me, I'm driving a Lamborghini, give me attention. It's more so, I enjoy this machine and I've always wanted to own one per se. But I think that if you're going to go out of your way to put yourself in debt or to buy these things or to go pop bottles or whatever, well, you get sucked into that lifestyle and it's very hard to get out of it.
100%.
And to your point with credit cards, just because you have the credit limit, it doesn't mean you should use it to get to that limit. The limit is there to sway you, and we're becoming a society of, buy now, pay later. You're seeing even all these services that are coming now of saying, hey, buy now, pay later.
When I was racking up all that credit card debt, I had an Apple Card. I called them. I said, lower my limit or I'm canceling my card. They said no. I said, fine. I gave it a week. I said, lower my limit now. Because I was like, just reducing your ability to spend that much is huge. Like, you psychologically, like, you think it might not matter because you're disciplined and all this other stuff, right? But, like, if you reduce your threshold and your limit, it will reduce your amount of spending. So I called them, lower it. They said no, and I canceled my card. And then they called me back after I canceled my card. They're like, hey, by the way, we will lower your limit. I said, hey, screw y'all. It's over already. Done. Cancel the card. And they're vultures out there, man. Like, they love that. They're vultures. Ruthless. It's terrible.
The whole banking system lives off of borrowing.
100%.
Like, borrow money now, pay later, and get stuck in. And now, don't get me wrong. There's good debt and there's bad debt. Credit card debt is just bad. I mean, you really, ideally, I believe in credit cards because you get rewards, you get points, you get things like that.
I think that's...
You have to manage it, and you have to set a budget that if your card crosses a certain threshold and you know you're overspending now, stop. It's very hard to do that in reality, but that's really how you have to treat it. Like, think of it as your debit card. Like, if you don't have the money, don't buy the damn thing. Wait. save for it. And that's really the issue is like, again, all these things, 0 interest for 12 months, or buy now, pay later, or split it over 6 payments, interest free, blah, blah, blah. It gets people sucked into it. But also you see it like we are becoming a subscription-based society. Like, subscribe
So
to this.
annoying.
Instead of paying these large sums, pay us 50 here, 100 here, 80 here, 70 here.
It's less psychologically.
But it all adds up.
Exactly.
Yeah, because if I tell you it's costing you $10,000, you're like, holy crap. But if I'm like, hey, for only $60 a month, you can get this, you're like, yeah. You know, it's the psychology of money. So that's the thing. I mean, obviously you have to build credit. Credit utilization helps.
Authorized
Having more
user.
credit limit helps you to borrow and do things and whatnot, but you have to manage that utilization.
100%.
You know, from a credit reporting standpoint, once you cross 30%, you start getting dinged. So if I have a $10,000 credit limit, you shouldn't have more than $3,000 as a balance, assuming you're not able to pay that off.
100%.
Because it affects your credit score and
100%.
so on. So it just depends. But I know we kind of went into, you know, different areas, but debt management starts with cash flow and budgeting. You have to know where your money is going. You have to sit down and write your bills and figure out what you're making, what you're spending, and then say, okay, can I afford this lifestyle that I'm in, or can I not? And if not, start looking for ways to cut down spending in certain areas. Shut some of these subscriptions off that just, you know, maybe you're using it once a month. Well, you know, consider taking that money and putting it towards debt or whatever the situation may be.
There's 100 million realtors, right? I know that. There's a lot of financial planners as well. So how do you stand out with all this red tape around you as far as what you can and can't say?
Yeah, boils down to what types of licenses you have as well, but being securities licensed to be able to handle someone's wealth and manage it and invest it on their behalf, you are very limited in what you're able to say and not, which makes it difficult to market. Like, I can't just pull up Facebook Live and start talking about something that's happening in the market with my opinion, because in order for me to post a video, I have to write the script. The script gets approved, shoot the video to the script. Once they approve that the video does match the script, and if they haven't changed anything, then I can post it. So if I have a timely idea in a market condition, by the time I get approval and post it, it's a month late.
Wow. So when you have to submit a script, who do you submit it to?
Compliance team.
And each firm, I guess, or business has their own compliance team?
Correct.
Wow. Whereas us realtors just come out here and spit whatever we want to spit, and then you got people doing the wrong stuff because
there's no regulation of what you can and can't say.
Now, I'm not asking for realtors to be regulated. Let's not head there. But
yeah, I think, you know, it's healthy in a sense because we don't want to sway the consumer in a certain way by saying whatever we want. But I also think it hurts us sometimes because, you know, there are a lot of great advisors out there who are a wealth of knowledge, but they can't say a lot of things, nor, quite frankly, do they want to go through the headache of doing it because it's such a timely process and so consuming that, you know, they're just not doing it.
So it sounds like word of mouth is super important in your business because like you're talking about those people, like let's say you have a top advisor or a top planner, right? And they have all these great ideas but can't share it. They probably, or like you would get the returns for somebody that they appreciate, and then they're going to go to their friend and be like, hey, Bashar executed on this. So word of mouth is probably...
I would say referrals and word of mouth is the number one thing in my industry, especially when it comes to, like, you know, I'm not getting referred to give you a pen or hey, come buy a printer from me or something. This is like, we're talking about your livelihood, making decisions that will affect your generation and the next generations to come. So it's very hard for people to open up, and money is a taboo subject. I mean, I've met with
100%.
Families or spouses that don't talk to each other about money. It's a sensitive subject. So having like being able to break into that and earning someone's trust is very important. I think you have to get people to trust you first, and then they're gonna listen to you and take the advice, but it takes time to build that trust. So it is much easier for you to go to your family member and say, hey, I work with Bashar. He's done great work for me. You guys should meet. Whether you need his services or not, I don't know your situation, but I think it's worth a conversation. That's typically how I like to get introduced, because I don't expect you to go and ask that person of their situation, and I don't need you to do that. It's more like, hey, if you're sitting at a family event or someone strikes a conversation, I would always love an introduction. There's the other side of it that's very difficult when a lot of people start out in their career, which is cold calling, door knocking.
I do door hangers and cold call every day.
Yeah, and that is a very, very difficult form of marketing. I mean, the amount of no's and rejections that you get is a lot, but if you don't have a market, you don't have friends or family, and that's why you see in the industry a lot of times when someone is starting out, they'll tell you, hey, go after friends and family members, because you naturally have that trust with them and the relationship, so it's easier to have the conversation. A lot of times, some people are like, no, I'm new in the industry, I don't want to mess up my relationships, so I would rather cold call. But cold calling is a tough game. I mean, if you're dialing 100, 200 names a day, maybe talking to 20% of them and getting, a lot of no's. I always say every no gets you closer to a yes, but it's a mental game for sure. And it is. I feel like it's an ineffective marketing method in today's environment. In the 80s, when there was no internet and you had a phone book, the only way you're going to reach someone is to dial it. Today, I think there's many different ways, whether you create events, you provide a niche specific target to where, hey, I'm a specialist for these people only, and I'm only going to work with these people, and then trying to figure out ways to get in front of that market is I think much more manageable.
Sure. Now, I heard something about the do not call registry, right? Like you have to, so you in particular have, well, I guess us as realtors too, but we have to kind of make sure somebody's on the do not call registry before we call them. So I guess what's that process like for you? Because I know what it's like on our side.
Yeah, so we have softwares and databases to allow us to download data and lists of information and phone numbers and names and professions and whatnot. And typically, depending if you're using a service, they're running it through a do not call registry before they hand you the list of names.
That's nice.
Sometimes, though, that's not always the case. And you're doing a coin flip. You're not supposed to call these people. You might accidentally end up calling a few of them. But I think, just be respectful. If someone tells you to not call them anymore, respect their privacy and just don't call them. If you're the type of person that's going to constantly pound the phone, I respect that hustle, but also respect the fact that if somebody on the other end tells you stop calling me, respect that and stop calling them. Yes, I get it that you're young and hungry maybe, and you're like, screw it, a no might turn into a yes later, but if you end up pissing somebody off, that could be a complaint. You just have to be careful in that environment, and again, just be respectful. But there's also a lot of people that will respect the hustle and give you their time of day, and then it's up to your skill set to shine or sink in that moment.
That's right. So there's a gentleman that I know who wholesales land, like small land deals, maybe $30,000 a piece, up in like middle or North Florida. And there's a gentleman he called that sued him for like $20,000 or $30,000 because he's on the do not call registry. Now, this guy is a serial guy that goes after the people that call him because he's sued multiple people over this particular situation. So I found that was an interesting story, and I've always heard of it but never knew somebody personally, and now I know them personally. So crazy situation, but that's wild. What?
It could happen.
Just
be careful. And again, I mean, how many spam calls do we all get on a daily basis?
All the time.
I mean, if someone can help me figure out how to get rid of all these spam calls, I will be forever indebted. Like the robocalls, the spam calls. And that's the other thing why I also think that cold calling is very difficult, because are you ever going to pick up a phone number if you don't know them? Very unlikely.
So here's my method. Let me tell you this. I cold call, then I text. So I get the response on the text, and then I add them to the CRM. And then that's how I gather their information, right? But most of my responses are texting, right? And I think that's the case nowadays because it's less invasive. Like if somebody's in the middle of something, you try to get them on the phone. No, heck no. You're right. I'm not answering any phone number I don't really know. Exactly. I might because I'm a realtor and I get a lot of calls like that, but at the same time, it's like, oh, just shoot me a text. Like, why wouldn't you shoot me a text? I think we've kind of moved that way. Just in humanity as a whole, it's like, just text, intro, I'll get back to it when I can. So you make a good point.
I don't know if it's going to be a client at any point, so I'll answer, but I don't say anything unless they speak first.
Sure.
Because I think there's something that triggers it once you speak, or you've gotten the one where like you say something and then poop immediately like hangs up, and I'm like, did they just? And
then they just leave you a voicemail. Or whatever?
They just try to like put me on a list to know, okay, this is a real person. They've answered. Now we're gonna keep dialing them. Sure. I don't know. There's just so many things out there today with AI and where things are going in that field. I mean, at some point in the future, your mom might call you, and it's not really your mom. Someone stole her voice. It's happening right now.
There's a scam going around like that where the AI makes them sound like your daughter or son or whatever, and they're,
hey, it's mom. I'm in trouble.
Yeah.
Send me some money.
Send me $100,000.
And it's the Nigerian Prince story. That's trying to get some money out of you.
That's
and then
crazy.
The other issue there is like you have a lot of bank accounts that used to be voice security control or something, like where it listens to your voice to give access. I'm curious what's going to happen to all of that with AI getting really good at
mimicking voices.
Their voices.
That's interesting. Well, we will have to see. Okay, so Bashar, now let's say somebody wants to find a financial planner, right? They're out looking. How does one find a trustworthy financial planner that they can work with?
That's a great question. Before I go there, I wouldn't say it's a downside, but we can't have like reviews or testimonials that say Bashar is the best advisor. You guys should go work with him.
You cannot have you can't have testimonials.
It has to be very generic, and it can't allude to the service or what's happened. It could be like, go talk to Bashar. He's a good advisor, but it can't get into details of what happened and whatnot. So I think there's a lot of red tape around that in my industry. I think it is improving, but that's one area to where you can't just Google an advisor, find Google reviews, be like, oh yeah, like he's got 5 stars. Like many consumers today, if you're picking a restaurant, you're like, oh, well, let me check their reviews if you haven't been. Well, that doesn't exist for us. But what I would say is I think figuring out how they're licensed. Second, if they are investment licensed, there's something called broker check. So you can actually look up the person and see if there's any litigation against them or if there's been any history of misconduct and things like that. But then beyond that point, what types of certifications that they hold as well, beyond licensing. So I actually attempted the Certified Financial Planning certification, did all the courses, sat for my board. This was probably 2018. Unfortunately, I didn't pass my board. Hopefully I'll reattempt it after I started my business now, the last couple of years, is to take the time and study for that board exam again. But by being a CFP, it is a fiduciary standard. So I know the fiduciary word is being thrown a lot in our industry. But what a fiduciary means is simply they have to, by law, put your interests first before theirs. So they're not going to push a certain product, or they're not going to put you in a certain strategy that's only going to benefit them or their firm. It has to be in your best interest. Otherwise, you can get into misconduct and litigation. So where I like that is in our consulting work, it spells it out in the agreement that it is a fiduciary agreement. It's a yearly contract. So basically, you're putting the advisor on a retainer. You're paying us for our time, but we are advising you on everything in your life, and we're not biased towards one company or one product or one solution and not. It's really more so, what do you want to accomplish and how do we achieve that efficiently? So I think that's very important. I think the consumer just needs to, ask some of these questions when they're sitting in front of an advisor, what types of licensing they have, how long they've been working, what do they typically deal with, and things like that, which really helps them to figure out, okay, because the other side of it is there's a lot of financial advisors that aren't really advisors. They might be an insurance agent. There might be insurance agents that are claiming to be something else. Because depending on what licenses they have, you can call yourself many different things. And I think that's another area where the regulators are cracking down on. It's like, okay, if you're not licensed to do one thing, you can't call yourself X anymore because it is confusing the consumer to where they don't know, like, am I sitting in front of an insurance agent? Is he going to sell me a product? Is he a planner? Is he an investment-only guy? Is he both? How do they get compensated? Is this the best thing for me? Is it not? And that's natural to have. I mean, especially if you don't know the person. And that's why I always say, if it's a referral and it's coming off of multiple people are saying, yeah, I work with this guy, they do great work for us, it alleviates a lot of that. But if you're someone who's just going off of the internet and you don't know that person, you got to ask some questions.
Sure, so you got to dive deep.
And quite frankly, interview 3 to 4 advisors. Why not interview 3 to 4 advisors? If it's going to be someone who's managing your livelihood, there's nothing wrong with getting 2 to 3 different opinions. And then deciding who are you going to be the best fit with. Sometimes they might be very smart and know their stuff, but you don't like their personality. You're not a good fit for them. And just find the fit. I mean, I think it's the same thing in your industry where, I tend to believe that people do business with people they like and trust. And if they don't like you, I think it's going to be very hard for them to trust you and then ultimately do business for you. So just find that personality match, the person that you rhyme with, and go from there.
100%. So many things to unpack there. So yes, I totally agree with you. In our world right now, the commission structure is changing. And as we know, which other people have brought up in this podcast, is like realtors get a bad rap because sometimes they're after commissions when the sale of the property or the purchase of a property isn't in the best interest of the person, right? Like real estate agents just want to collect their commission, right? They're paid when a property sells or is purchased. So I know that has been a conflict of interest, and a lot of people have brought up that concern. Now, we do have a fiduciary responsibility. Do people always exercise that? Absolutely not. Do some people get taken advantage of by realtors? I'm sure it has happened, right? So in our industry, it's like, yes, finding that person that you can build a long-term relationship with. I feel like in our industry, it's so important to be in for the long haul because so many things happen over the course of your life, or so many things happen. Like if I have a good relationship with somebody and a crazy deal comes along, like they're going to get first dibs at that investment opportunity. Or if they use me to sell their property, and like I'm going to return that favor, right? So it's like an investment. It's almost an investment in the relationship and in the person is how I look at it. And yes, they have to trust you. So that's interesting to hear you talk about how to choose and how to pick a good financial planner.
I agree. Yeah, and just understanding how they get compensated. I think there's nothing wrong with asking those questions. I often bring that up in my first meeting, which is like a complimentary consultation. Quite frankly, I'm interviewing the person to figure out if I want to work with them just as much as if they want to work with me. I think it has to be, it's a two-way relationship. I can't be the only one who's wanting to make it work and not the other way, and vice versa. So I think just finding that match and synergy is very important in my industry, because there's going to be a lot of things that could go wrong in the economy and the world, and having that trusted person to guide you through these ups and downs is very important, and trusting their judgment. You're hiring a professional because you don't have the time to do it yourself. And yes, you can watch a billion YouTube videos, but you don't do it on a daily basis. And that's why I always say, why not take all that extra time and invest it in your own profession or your business? Because that's going to yield you much further results than trying to be an expert at everything else.
100%.
You know, I'm not going to watch videos of a dental extraction and then take up pliers in my house and pull my own tooth.
100%.
I'm going to go to a dentist.
100%.
Yes, they're going to charge me for their service, but they spent 10 years of their life learning that.
Sure.
I'm not going to learn it by watching 10,000 hours of videos or whatever it is.
Totally understand. Absolutely. Couldn't agree more.
And it's interesting you brought the MLS situation. Yeah, I mean, I think, the fact that you can't state commissions anymore is going to be, in my opinion, from a consumer standpoint, better, because I think the issue was there's a lot of homes that if the realtor saw, oh, well, this person is only offering 4% commission versus this property that's paying 6%, well, why the hell would I waste my time with this? I'm going to go to the other property. Granted, yes, everyone wants to make a living, and obviously you're going to chase, the higher revenue source potentially. But I think it's going to be better, this is just my personal opinion, for the consumer to negotiate those offline, to where now more people are going to get service. And yeah, okay, sometimes you might get a concession, but that sale could lead to another sale from their family member, could lead to another sale from their neighbor, and so on. So I think sometimes you have, to your point, you have to play the long game, and it's not always just about that one transaction. It's building that relationship and the trust so that whenever they're thinking of buying and selling something, or someone they come across with, I'm going to think of Alec right away. Hey, he took care of me last time, he's going to take care of me again, and he's going to take care of my family and friends. And I think that's where you have to think long game. And yeah, I get it. I mean, as young people, sometimes we're hustling, we're trying to make money, but I tell my clients all the time, I'm not looking for a one-time transaction. If that's what you're looking for, I'm not your guy. Nothing wrong with people who are just doing that side, but there's plenty of people who will handle that. I'm not that. I'm looking for a 40-year relationship.
100%.
I want to be here from now until hopefully I'm gone or you're gone.
100%. I know, I mean, a lot of people in my industry, there's so many real estate agents, right? They just go with the easiest or most convenient one. And there's a gentleman that I know, he's around my age, maybe between 25 and 30, for example, and he's using like a 60-year-old realtor that doesn't really have any significance to him. I'm looking at him, I'm like, hey, why would you rather make this investment and relationship with this person than with me? And I don't think it ever occurred to him like, maybe this is a long-term relationship. But I'm sitting there, I'm like, man, this is wild. Like, you could come to the parties at the house, you could be included in like this network that we're building out, you could be introduced to all these people, but instead you're with some lady who doesn't have social media, who can't market your property correctly, and quite frankly, isn't going to help you stand out in the condo crisis right now. So when I talk about all these things, I know a lot of them see my Instagrams or whatever. Like, these are real life examples that I talk about, and I'm just sitting there thinking like, why? Like, I'm shaking my head. And it's my fault for not being in front of that gentleman at that time, or doing something that pissed him off that he doesn't like. Like, we're not going to win everybody, right? But I think the consumer, or the customer in this case, for both of our scenarios, needs to realize like, no, like, make this investment, time investment and relationship investment, it's a big decision. Like, don't make it just like a random thing or like a spur of the moment thing. Like, take your time, make sure it's the right person, and make the right decision.
Exactly. And I think that's where you see a lot of people in most professions create teams. Also, like, yes. So in my instance, for example, like, people value experience. And I understand that, like someone who's been doing it longer will probably have seen a lot more things than someone who's just starting out, which is why I think as a young professional, you should try to work with someone that's been doing it for longer, maybe team up with them, try to work their book of business if that's possible. In my instance, I have two other partners. One of them is a CPA and attorney, but he also practices as an advisor. and the other one focused on the retirement plans. And I think I mentioned this earlier, but he's almost 50. My other partner is in his early 40s, and I'm in my early 30s. So there will be a natural progression, but at the same time, also I think it makes the client feel better when they sit in front of a team. Because, okay, if you're just dealing with one individual, this is my opinion, what happens when something happens to me? To your point, like that 60-year-old advisor that's still a solo practitioner or realtor, well, when they're gone or they're retired, they're done. Mm-hmm. So having some sort of a succession plan or having a team environment, I think, is where the industry is shifting in many important professions.
So there's a lot of, I'm looking into like trusts and estate planning and all these different things, right? Each estate attorney has their own version of a trust, and they're telling me different things. Now, there's this one company that I'm very interested in, and the gentleman is like 85 years old, right? His succession plan is a little shaky, in my opinion. I straight up asked him, so what happens when you're ready to retire or when you pass away? He's like, yeah, it's going to go down to this part-time person. I'm like, part-time person? Like, okay, like I'm trusting you with a big decision and all of this. Like, a succession plan is so important. Like, I use that in my personal decision-making when I'm looking to build a relationship like this, because I know some people that have had like an attorney pass away, for example, when everything is wrapped into their like business, and and there was no succession plan, and it went very horribly. Like, you have to go in there and dissect everything and change everything around. So that's an interesting point that you make up.
Yeah, I think, and again, it makes you feel better knowing that, okay, if something happens to Jimmy, Bobby is going to take it over.
Sure.
If something happens to also Bobby, Catherine is going to take it over, and so on. So there is a natural succession, and that's where you see a lot of the larger firms will create that family office style where you walk in, you meet multiple professionals, or you're getting touched on by different people throughout the process.
Sure.
It's kind of the same idea we have and we've created. It's like we have staff, but we also have different specialties and different partners to where, again, I don't know everything, and nor do I want to know everything. I'm going to stay in my lane and focus on what I'm really good at because that's what I enjoy, and vice versa, and it works really well. You mentioned estate planning. There's a big push now because estate limits might be reverting back to the original tax law at the sunset of the tax code end of next year. So you talk to any of those big shot estate attorneys right now, they are swamped. When it comes to trust work and planning and gifting strategies, now is the time to get those assets with the current estate limits, which I think are like north of 13 million per individual, because if the tax code reverts back to the original code,
you'll be grandfathered.
It was like you will be grandfathered right now. Correct. Okay. So if you do the planning now, this is for the higher net worth individuals, and you do these gifting strategies, or you create the trust, whether all these things. And I'm not an attorney. I'm not going to speak for attorneys, but these are things that we're talking to our higher net worth clients, especially with my partner who's a CPA and an attorney, is to say, hey, this is the time to do it. And a lot of the estate attorneys are getting swamped. Like, some of them will be like, we're not taking any more work for the end of next year.
That's crazy.
So, because now we don't know what's going to happen. Are they going to extend the tax code? Is it going to revert back? Because with Trump laws, they sunset the end of next year. We just don't know. But take advantage of it while it's there. Because
don't risk the biscuit.
It's going to get cut in half if it reverts back.
Sure.
So a lot of people who are worth $10, $12 million might not have an issue right now that might have an estate problem issue in the future. And what you got to think about is, it's not where you are today. If you're that wealthy and you're in your 50s right now, well, you have to extrapolate and think, what am I going to be worth when I'm 85 and 90? And that's when it becomes the problem. It's not necessarily just about today. So doing that planning is very important.
Sure. You're going to be worth a lot more towards the end of your life than you are
correct
midlife.
Yeah. Like, if you're
hopefully, let's hope progression goes your way.
It right, and you invest your money well, you might very well be worth 30, 40 million bucks in your 80s.
Sure.
And that, I don't know about any of you, but you work hard for your earned money. you don't want to give 40% to the government due to the estate taxes.
100%.
No one does.
100%.
So think about these things.
Absolutely. I think that brings up a good point. Awesome. Well, Bashar, thank you so much for being here. What I'm going to do on YouTube is I'm going to put your Instagram or however you want people to contact you. So can you tell them where to contact you?
Yeah. Honestly, I'm most active on LinkedIn. I love using LinkedIn. I have a Facebook business page. I'm not as active on Facebook. So the best way to find me is on LinkedIn. And I'm pretty active there, and then you'll have my information. I also have a Calendly there, or an appointment setting service. So if anyone is interested in, having a consultation, just having a discussion, whether they decide to work with my team or not, I love having conversations like this. And yeah, that link is on my LinkedIn page.
That sounds good. If you're on YouTube, that's right below here. But yeah, thank you so much. It was great to have you. I appreciate it.
Thank you, Alan. I appreciate the invite.
Absolutely.
Great hanging out.